Hi, welcome to the Market Alert for Tuesday, the 12th of December 2023. So Bitcoin, big tech and bullion dumped ahead of CPI. An angry old lady strikes again. No surprise to me, as I mentioned before, about the pounding of the metals. Indices grind higher ahead of a plethora of risk events this week. We'll look at that in more detail now as well. Today we've got the CPI from the US. That's what the market's going to be waiting for. But I think tomorrow we've also got the FOMC, which we have, and the rates are to be left unchanged according to Forex Factory data here. And then we've got the press conference and statement at 7:30 p.m. tomorrow. We've got GDP for the UK as well, but to be honest with you, it's not really a factor. Everything's going to be focused on the CPI and the FOMC data to be released tomorrow evening at 7 p.m. So let's have a look at yesterday. The market was fairly quiet to begin with, picked up later on in the afternoon when the Dow opened. So let's just have a whistle-stop tour around the markets. And this morning, I expect the markets to be a bit of a up and down, sideways, until the data is released at 1:30 p.m. for those CPI numbers, which are forecast to come out unchanged, which is very interesting indeed. Like I say, in the industry, it's known as the CP lie, because that's exactly what it is. Kicking off with the Dow, you can see yesterday we moved higher. We took out the highs that we've been in to the left there, but a sideways channel. The market took this out yesterday. Bit of weakness overnight at the moment. Let's have a look at this in a bit more detail in the 30-minute chart, but let's have a look at yesterday. As I said, the markets were sideways till the cash Dow opened. Market continued up, went through the high, which you can see there. We needed some serious volume to get through this level as well of resistance, which we saw in the daily chart, and then the market moving up there. Sitting on the high in the close at the moment. That will depend on whether the market can hold at this level, and also I suspect that it's going to tread water through the morning session anyway. German DAX continues to put in higher highs, higher lows. Yesterday, tiny bar, bit of indecision, was seriously overbought. We need a correction in this market, and there you can see up again on the overnight in the 30-minute chart. Expect this morning, choppy sideways range, and it did barely anything yesterday until the cash Dow opened, but it still took a lot to actually start to drive the market higher into late evening, late afternoon and late evening. Market then continuing higher up to the R1, and you can see at the moment coming back towards the high of yesterday, which is obviously to the left here before we got into the evening switch off, and then sitting at the 20 bar moving average as well. Needs to hold above the high and the close, and the 50 EMA is there, and the DP, and the psychological level of what have we got here? 16,800 is required. Also 17,000 is the target for me for this market to end its Santa rally. So let's have a look at the S&P. S&P also breaking out of its sideways range there. If we come in at 0% on the CPI, I expect the markets are going to continue to move higher, because that's certainly lowered the bar there. So we can expect a bit more to the upside. Market, like I say, breaking through slightly. 30-minute chart, again, absolutely nothing in the morning. Electronic session dead as a dodo. And then market sitting on the close and the high overnight. In the FT 100, sideways to higher, stuck in a range still. 200 MA giving the market a bit of grief yesterday, but through this on the overnight. And there you can see down yesterday 50 odd points, and then back 50 odd points, then stuck in that sideways range type of activity, and also overnight as well, both the close, both the DP, and the two averages there of 50 and 20. US dollar sideways to higher, waiting for the CPI numbers and also the FOMC numbers tomorrow night, so not doing an awful lot there. Quick look at the metals, and here you can see, if we just do a retracement from there to there, we're sitting on 78% retracement. It's not over, a bit of a bounce overnight. The market is going to continue to move lower. I don't have any doubts about that, because that's exactly what they've done for the last 50 years, is continue to batter the price of silver down as much as they can. We've already had the 1, 2, 3, 4, 5, 6 days. We've got a bit of a dead cat bounce going on there at the moment, and you'll see that overnight market just trying to move up there. But yesterday, another hammering to the downside, which is what is normal in these markets, has become normal. Gold holding better than the silver market, of course, because it's widely more accepted and it's less volatile, as we know, and central banks obviously continue to buy it. So yesterday, though, as you can see there, hammered to the downside once more, sitting at the close at the moment, but struggling with the DP, waiting for those CPI numbers out at 130. In the gold-silver ratio, a bit of a pullback during yesterday and overnight at the moment, but don't hold your breath. This likely to go up to that 90 level, which I've spoken of before. The short side is probably the best side at the moment as far as silver is concerned, because they'll want to batter it down to $20 if they can. Makes for great buying opportunity on the physical side, because you don't have to worry about what it does. Just longer term, the market will eventually break. Quick look at the basic trades for yesterday. So yesterday's basic trades, well, there weren't any again because we got these tiny bars. There's no sort of explosive moves, no liquidity coming in. The market just being marked up by the market makers, you can see there. And the market just trading in a sideways range yesterday. Narrow range, not even 50 points in the morning. Market sideways and to lower, coming off the DP, twice off the DP, and then just stuck it in a range through lunchtime. You can see we're trying to make our way back to the high. Market doesn't really do a lot, comes back again, just that sideways move, and it was only when the Dow moved in the afternoon the market then started to move higher. But you can see how whipsaw it was. It would start to move higher and then come back, and that seemed to be the theme for yesterday, and I expect that to be the same for this morning as the market trades sideways, but eventually got back to Friday's high and then just broke through. But that was in the early part of the evening, just after 4 o'clock, and that's how it remained until it just had another boost from the US markets there. So a quick look at the overnight markets. So at the moment, there's yesterday's high. The market, again, very, very tiny bars at the moment, which you'd expect this time, but don't expect them to get much bigger at the open either, as the market treads water for those CPI numbers. There's the daily chart, which we've already looked at. Got a parabolic rise in prices there. 17,000 is sort of the high for me, or the target where this market is likely to go to before it then sees a corrective move. Okay, that's it for this one. Let's see what those CPI numbers are later this lunchtime. And with that, as ever, thanks for watching. See you in the next.